Hello, this is Will from Will to Trade. You can check me out at willtotrade.com. Join our chat room and get involved in all the trading activities that we do. I wanted to go over market recap for trade for ticker symbol LBIO. That's LBIO. Today is June 3rd, 2016. And on the screen right now, we have the 5-minute chart with a whole bunch of lines drawn. And I want to go over this chart. I want to go over some of these lines. I want to go over some of the trades in this. And in order to really see everything, we need to switch back and forth from a 1-year daily view to our 5-minute view to our 1-minute view, and then I think everything will be really clear. So LBIO was a huge runner, huge volume activity today. This is the 5-minute, and the day is still going on. There's maybe like 25 minutes left in the trading day, and so who knows where LBIO will end up as I'm making this video. But let's take a look for just a quick glance at the 1-year chart, 1 year. And you can see, there's little rings there, you can see, generally speaking, kind of a bearish year, at the same time, a pretty rocky year. You know, up and down and 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 then eventually up. I mean, really just a tumultuous year, in my opinion, for LBIO. But I think what's most prevalent is to notice this huge green price candle. It's a massive one. I mean, for sure the biggest one of the entire year, and this huge big green volume. And again, if we zoom in a little bit here, yes, there it is. Look at that. Huge big volume, huge big candle. So we know that LBIO was making some really big moves today. So let's zoom back into the 1 minute. Let's take a look at this, and we'll kind of start in the beginning part of the day. And I'll explain the alerts that I gave in our room, what some of the traders were able to do, and then I will explain pretty much like the two main different times you could have traded this and the sort of two different strategies to trading, just to give you ideas of how you can structure some of your trades. So, okay, we'll just kind of go through the day by day. You know, it obviously was very little volume in the morning. It pulled back, and in this sort of cup, if you will, this sort of downturn, it was not on my radar at all. It was not on my scanner at all. And then it started popping into highs of day. Again, you know, I wasn't totally completely focused on stocks that were making new highs of day. If it did, it certainly could have come up on your radar. But I think it came up right around here. By the time it made it up here, it was up about 5% for the day, and once it hits above 5%, then it comes up on my screeners, and then I see it, and I want to see not necessarily what's down, and not necessarily just as it begins to go up, but as it's really made some moves up. Okay, so I saw it here, and again, we're like around 680s, and I was kind of watching it for a minute. I wanted to see, okay, what's it going to do? It's obviously made some big moves. You know, it's went down, it's shot up, and without knowing the rest of the day, I didn't know what was going to happen. I didn't know if it was going to, you know, just kind of pull back, or if it was just going to kind of flatline, or if it was going to, you know, consolidate and then push up forward. I didn't really know. So I didn't want to alert it until it broke through another dollar level. That was my thinking. That was my logic on it. You know, it seemed, as you can tell here in these candles, it seemed a little erratic at first. You know, because it shot up, it came up a little bit more, but ultimately a red candle, and then kind of pulled back, but ultimately a green candle, shot up again, but a red candle, and then came down, and then came down more, but another green candle. So I was just like, you know what? I need to see a push above 7. So I alerted 701, and that's what this blue line is here, 701, and said, okay, you don't buy it at 701, and basically sell it anywhere between, you know, like 735 and 850. I know it's a big range, but it's hard to really know where it's going to land in that range once it starts moving. So this blue line again is the 701. And this is even before, as you can tell, like the really, really big volume, you know, surges that came in. But what a huge candle. So, you know, members got filled somewhere in this neighborhood, and then it, you know, kind of flatlined for the next candle, and actually got halted, I should say. You know, coming to the halts. It's always kind of nervous because, you know, it just shot up so much. And then this next candle up here goes just below $8, and members were able to sell up in here. So again, you had to be really quick on this one, okay? You had to be really, really fast. you'd either have to find it really quickly here, which is really intense. You would have to try to figure out some move in here, which is I think pretty difficult. It's kind of an advanced trade. You'd have to jump in here, wait to the halt, sell there. If you don't sell it right away, then it pulls back. So my personal opinion is that trading it anywhere in this first half an hour of the market is difficult. Doesn't mean it can't be done, and we had members in the room that made money on it, but it's difficult. I think what's easier is the second trade that came, and we personally weren't actually watching this at that time because we were checking out a whole bunch of other stocks, but now since the day has progressed, it's easy to tell. So now what we're going to do is we're going to toggle back and forth between 1 minute and 5 minute candles, and that is just personally how I like to look at the candles. I think 1 minute can give some really great detail, and 5 minutes when it's like a good zoom out to kind of see the big picture. So if we scroll out, if you scroll out here, and again these are still in the 1 minute, you're gonna see that it pulled up, came back, went back up again, but then ultimately formed this really nice cup. And this cup, or even this whole entire cup, this is what you're really looking at. Let's zoom out to the 5 minute view, and I think it'll be even more clear. So again, I'm repeating myself, but I just want to be really clear. You can take the trade here first thing in the morning, and some of our members did. And I know there's some traders out there that love to trade any stock first thing in the morning, get their money, they're done, and be on with it. And I personally think that trading is more advanced. Doesn't mean you can't do it, but you got to be quick, you got to be ready to go, and it's not for everyone. Whereas the second trade in the day becomes a much easier trade. All right, so, and how do we determine the second trade of the day? Well, we have to look for a few things. We have to look for a stock that fits this parameters. And the parameters are something that shoots up, 1, 2, shoots up really huge, and then it pulls back. And then it eventually bases out, and it bases out, and then it forms its cup, and then it breaks through one of these points or even the high, and then as you can see, it squeezes all the way to $9. So let's kind of go over that in a little bit more detail, and we'll talk about support and resistance. We'll talk about how resistance becomes support and support becomes resistance, etc., etc. So we're going to go back to the 1 minute candles, and we're going to take a look. This is 701. And again, coincidentally, this was just the mark that I had said to buy it at because I wanted to see a break of the $1 above $7. And if you notice, interestingly enough, right about here it kind of taps and goes up. Right about here it taps and goes up. Right about here it kind of taps and goes up. Right about here it kind of taps and goes up. Right about here. I didn't know this at the time because I didn't have all this drawn out. I just had this part drawn out, but I wanted to break above. So besides for this first candle, you have 1, 2, 3, 4, 5 times it hits the 701. So in this part of the morning, 701 is resistance. It's trying to break through 7 or 701. And then after it pushes through, now all of a sudden 701 becomes support. It lands pretty much at that 701, maybe a little below, maybe a little above, but pretty much in that area, and it bounces off. It doesn't go below the 7 mark. In the first half of the day, sure. Or the first portion of the day, sure. But then once it breaks, it doesn't fall. All right, that's the 7 mark. The other marks to see are right around here. This would be 751. This is 760. And then, of course, up here, this is like a 801 mark. Depending on how you want to look at it, let's look at the next number up. Let's look at 801. This 801 obviously was a point of resistance because when it first squeezed up and then it went to the halt and then it squeezed some more, it couldn't break it. Again, it went to $7.99. It didn't even make it to $8. So it squeezed all the way up, almost got to $8, and it came down. So this $8, this purple mark, becomes another point of resistance. And again, look at this. Okay, you eventually make your all the way to the other side of the cup. It squeezes up again. And look, it comes back down just pretty much exactly at $8 or $8.02, what have you, 8.01 right here, basing around 8, and it comes back up. So again, 8.01, whatever, is looking at resistance in the first part of the day. When it finally breaks through, now this 8 level becomes a new support. Just something to understand. So, okay, so let's go into a little bit more detail of how you can determine these lines and where you can get in and what's the best place to get in. So again, what you want to do is you want to look for a stock like this that surges up. You understand resistance that becomes support. You understand another point of resistance that later becomes support. And look how obvious it is now on the 5-minute view of the $8 support. And what you're looking for is a break above on this cup. And I drew a few different lines because there really isn't any one right or wrong answer. I keep talking about that in all the videos. There isn't one place where you say, this is the correct spot to buy, this is the perfect spot to buy. If you buy a little bit too low or a little too high, you're wrong. There's just different ideas, different techniques, different strategies. All I really can do is show you, maybe 3 or 4 different places you can buy, and then you can make your own opinion, your own decision as to what style of trading you like. But again, the style of trading that we're talking about is one trade first thing in the morning, and then a second trade somewhere in here. That means buying it somewhere in here. Now, when you buy it somewhere in here, it's a much slower, calmer, more relaxed buy. It's a much calmer, slower, relaxed sell. Because as you can tell, if you buy it here and you sell there, or if you sell here, or if you sell there, it happens in a much longer time span. It's like a half an hour or 45 minutes or so. Whereas this is like 2 minutes or 3 minutes or maybe 6 or 7 minutes if you factor in the halt. Okay, so let's just go over the different schools of thought of where you would buy on the right side of the cup. First of all, before we talk about the right side, there are those dip buyers that we're all looking at the same thing. We all want to see it squeeze up and then come back and consolidate. And there are those dip buyers that say, you know what, I want to buy here at the base. No right or wrong answer. Hey, if you want to buy at the base, you're going to buy it at 7 or maybe just a little bit below 7. Your logic is, it's basing out. Look, it hits it 1, 2, 3, 4, 5, 6 times. Again, on the 5-minute view, 7 or as close to 7. That's where I want to buy. Because if I'm wrong, I'll let myself get stopped out just a little bit. I have a little bit of risk to a much bigger reward. So that's one place that you can buy. Okay, you can buy at the base of the cup. Another place you can buy in the extreme is all the way above the high, because this was a previous high of day at $7.99, and then you would set your new place to buy just above it. It could be at $8, it could be at 801, and just coincidentally, this is a dollar break, but this could have been different. This could have been like 811, and you say, okay, I'll buy at 812 or 815 or whatever. So again, you can buy at the base, or you can buy at the break of the previous high of day. Now, other traders will say, you don't need to buy all the way completely above the previous high of day. You're waiting too long. Why are you going to wait that long? Just buy somewhere in the middle. And those traders may kind of use the terminology that I use. I say wicks are tricks. This is a wick, this is a wick, this is a wick, this is a wick. Wicks are tricks. This is a wick. So some traders would say, buy above high of day for confirmation. Okay, great. Or some traders may say, wicks are tricks. Buy in the middle of this wick, yet at the same time above the inside wicks. Right? Notice that in the middle of this wick, but above the inside wicks, and that would put you at 777, and you buy right there. Right? So you buy right here, or you buy right there, or you buy somewhere in there. The other place you could buy is on this purple line. And you would actually make your buy right over there. And the logic there is to say 2 things. One, hey, wicks are tricks. We got 1, 2, 3, 4 wicks. I don't care about those wicks. I don't care. I'm going to buy. But I'm buying above this stem here, the top of the stem, right? This is our big surge up. And then then it kind of squeezed into this red candle. I'm kind of really ignoring this red candle. I'm buying above this stem. Buying above this stem right here takes me at 760. And the last place you could buy is this line right here, which is above this stem. Okay, so it's in the middle of this stem, but above this one, through the 3 wicks. Wicks are tricks. Above this wick, and into here. So there's no right or wrong, but notice if you buy in anywhere of these places, down here, right in here, right here, right here, or right there, you do the math, you could squeeze easily 5, 10, 15, even 20% or more maybe, depending on where you buy on any one of these 5 different locations and sell anywhere from here or all the way up to there. I know there's a lot of information. If you're overwhelmed, go ahead, rewind the video, watch the video a couple of times. All I'm trying to do is just present different ideas, different concepts, because you look at a chart like LBIO, and there's like 100 different ways to trade it. There's ultimately no right, no wrong answer. And a short bias trader may look at this chart and said, hey, forget buying and selling it. I'm gonna short it right here at the top. I'm gonna short it at $9. I'm gonna short it, when it fails to explode well above $9, and then I'm gonna cover down in through here. Just the 810, 820 range. Okay, so that's a whole another school of theory. But the point I'm trying to illustrate is the 2 main ways of trading in the frenetic morning, which is really intense, which might not be for everyone, and the sort of slightly more relaxed, slightly calmer midday. And again, the midday trade, you have more clues and more information from the morning activity to be able to set things up, to understand where points of support and resistance are, where's your high of day, where's your wicks, where's your stems, etc., etc., etc. This is a really long video, much longer than I thought. If you sat through this video, congratulations. If you like the video, give it a thumbs up. If you love the video, hit subscribe. If you think this kind of trading is really fascinating and want to get into our room, just go to the site, willtotrade.com, fill out the form. We'll get you all set up. Thank you so much. Have a great day.